All right, let's jump into things. Where we at? It's 9:43 on 9th of May. So look, I'll start off obviously with a little bit of a recap of the news that we saw overnight. So as we saw, pretty quiet into the end of Asia, well through all of Asia yesterday, and the biggest sort of ticket item last night was the BOE. But again, look, came in 4.25, so 25 base point cut, as expected with the market. Wasn't really a massive mover as far as I saw. Well, it didn't really sort of. The thing is sort of like it'll no doubt affect the GBP pairs, but I don't trade these, so it's not really something that sort of permeates across the whole market. For instance, sort of like so, if you see something with like the BOJ or the Fed, that can affect things that aren't directly you know yen or USD crosses. But you don't really see a lot of sort of flow through the rest of the market. Particularly, it wasn't a shocker. Maybe sometimes if you get something where they sort of call it wrong and it's sort of like a hold or a double card or whatever kind of thing, you might have seen a bit more of a move, but not a great deal with it all. They do, as I said, with each time they do a bit of a split with the three numbers over here. So basically, sort of people that are sort of leaning in each camp. So you might say here XXX format. The first number, uh, yeah, increase. So basically, sort of like a hawkish, neutral, or dovish approach towards things. So obviously, nobody's sort of looking to sort of increase rates. We know that it's pretty much across the board. Um, Majority there, seven, so lower down than what was expected, came in for a neutral, and then obviously two in the sort of more cut camp kind of thing. But they took it sort of quite hawkish kind of thing. So maybe something to take away from that across the rest of the market as well. Anyway, moving on, we had unemployment claims, snoozer within 3,000, pretty much on the money for what they sort of were looking for. Little bit of US data out here, and this is the one that I was talking about yesterday. Um, excuse me, that was coming up. So this is labor costs. So again, it's up the stream from what would then go down to end user consumer. It's one of the inputs for it all. So labor costs. So obviously, in production of making these things, it's not just the materials, but it's also the labor cost of course as well. If this is going up, and it's quite a big jump up there. So this was revised down from 3 down to 2.2, but jumped up to 5.7%. So I mean, they were expecting a bit of a jump up, but it's coming quite strong. So again, it's not a massive. This bit of data by itself is not going to move the market, but it's a tick in the camp of something that sort of backs the idea of holding, not rushing to cut rates, put it that way. I mean, they're not raising rates, but they're not, as Powell said the other morning, they're in no rush. And I mean, so this kind of sort of stuff is what's important to keep an eye on because I'll get to DXY in a moment, but we got a major kind of breakout off the lows there. So with that happening, there's a good chance that when we start to see a culmination of these sort of stronger bits of US data altogether, that changes the narrative of hold on, wait, we've got a breakout here, so technical. Then the data is actually still strong, still strong. We've seen it before. They use the term USD exceptionalism with the data, and look, they do have the ability, and they've proven it time and time before that while the rest of the world starts to crumble and fall away, they can still produce quite strong numbers. And that's the reason that they're not in a big sort of hurry to cut rates because from a fundamental sort of point of view, they're not seeing drastic measures. So, if you see worse and worse economic data, well, you need to stop that. And how do you stop that? You sort of basically, they use the tools at their disposal. This is basically just a euphemism for cutting rates. Um, and they cut rates. They make it easier for people to borrow. People borrow. They work. They employ more people. They ramp back up production, and things move back up. Obviously, with that, then you've got to sort of worry: have you done that too much? And does inflation go up? So it's a balancing act along the way. But point is that, these numbers, albeit they're not the sort of big sort of mover things, but we had NFP out last week. That was USD positive. Little sort of things like this with, and this is where this is relevant with that idea with the labor costs going up. Well, maybe that means that people have to charge more for things, charge more for things. That's basically what inflation is. Inflation goes up too high. If you're cutting rates while inflation's moving up, well, you're not going to do that because it's sort of like, as I said, they've got a dual mandate. They've got the two sides that they've got to sort of really try and balance. Um, so avoiding sort of a recession and an economic slowdown, and not letting inflation run out of control. So to me, I'm paying attention to these small little bits of data because I think if we start to see enough of these bits of data all plugged into, hold on, wait, this could be inflationary. This is strong. They're still producing high numbers. Output's still good. I think we could say higher for longer kind of thing in terms of the rates, which will bolster the idea of a US dollar DXY sort of continuation. But I'll get to DXY in a few moments because I got some good thoughts on that. The big one, I guess, after this was Trump sort of speaking. It was supposed to come at 12. I think it was probably closer to 1 that he actually spoke. It was pretty much telegraphed in that, announcing the big deal. So I said this yesterday because it was coming out as I was recording the video. And, it's like, oh, I've got a big deal with one highly respected that took about, I think, 20 minutes. And all the news outlets and that were saying it was the UK. So it was the UK. And so that's, it was telegraphed for it all. But, it's interesting to sort of see because obviously UK is one of these big kind of economies that's trying to sort of, I did hear from somebody, they're trying to sort of, particularly sort of show to the EU that they can be their own standalone thing. Because, of course, they had Brexit, they walked away from it all. They want to show that, okay, hey, look, we can still do things ourselves as well. It seems, I mean, I won't bother getting into it, but it seems horrible on the ground over there, quite frankly. But anyway, look, point is, that's not what we're here for. We're here for the charts and how things react and that. And we saw yesterday that it actually had a big impact when it was announced. Like when Trump tweeted and said, "Hey, look, we're gonna have a deal." It was boom, like you know what I mean. It was affecting the market. But when it actually came out last night, it was almost, if not the outcome, and if not that, it was almost inverse of what it had been. So just checking a few positions over here. So I think that was quite interesting. So I'll get into that with the charts as well. Through the rest of it, nothing really of note. Sort of moving along here. So we got a bit of onto today. We got a bit of China news. So we got trade balances coming out over there. What else we got? No, USD denominated trade balance as well. Both of these things looking to sort of tick down just a small amount. So we'll get to China as well because China's broken back into its little range. I did say yesterday that, pay attention to the yuan because the yuan breaking back into the range was going to put pressure on gold and was going to put pressure on Aussie dollar, both of which we saw uh, basically break down a little bit there. So they were some good trades that we got, and that's what the cross chart confluence is. Like you just got to think about all these things. That it's flows of capital across all markets. Not everything flows directly into something else. But generally, if you can see a couple of things happening in one direction, that will permeate across different markets, and that's where I sort of look for the targets or look for the trades anyway. Anyway, so that's China. That's coming out tentative, which is always interesting. That's for China and Japan seem to be the only people that do this tentative kind of crap, basically. Anyway, we'll see what happens when this drops. Through rest of Asia, nada, not even a thing. So no whispers. We got BOE, we got some speakers, and that's about it. Not really. We've got a heap of FOMC speakers to finish the week off. And then we got CPI, PPI for China Saturday, 11:30, of course. CPI, geez, they're barely moving at all. So they're probably even want to sort of look to get that up a little bit. So I hear about them sort of cutting and all this kind of stuff. So be interesting to sort of see what they do there. All right, cool. So that's done with the news. Let's jump onto the charts. Let's start off with DXY because this is a big mover at the moment. And finally got the breakout. This is big. I think this is a big, very significant move. It's what I've been sort of tracking for the last couple of weeks. I've been sort of covering it on every single time frame and covering the heartbreak and then the break and then all this kind of stuff. But in short, we've got a couple of things to sort of break down here. So we could see this inverted head and shoulders that we were working off. It kind of broke down a little bit, so it's got like a double shoulder onto this thing here. But 104 was the level, I don't know, maybe back over here. So, April 25th, which feels a lifetime ago. It's about 2 weeks ago or so. Um, this is the time I was saying, hey, look, it's all very well. It's coming up like this, but 104 or 100.4 is the level that we want to see beaten, and it took it right up to the tip of it and then smashed it down. And oh my God, this was a frustrating area. And look, as I said, levels is what I work with, price action and flow. But yeah, timing sometimes, particularly with this thing, oh my God. But it has been the same. So to look at how scrappy this is. Like I'll break it down a little bit more. But remember when we were at the top over here? Look at this. Look how long this took to break down. That's 56 days. I mean, how long did we take from this period here? A little time thing. 27 days. Is that all it was? Jeez, wow. So it's actually not as long or as bad as we've sort of seen, but maybe we can use this in relevance to say once we see how far this thing bounces, if it does, or I'm assuming it does, because as I said, I think it's quite a significant break level. We could see the repercussions of that, and that'd be something to look out for. Because if we have a look at these other lows, to turn this thing around, what are we looking at? 40 days. See, I was doing a little bit of work here. This. Oops. Wow, that's going back a while. Anyway, point is, these things take a while to turn around. Like, you don't generally say it's actually, so now that I'm looking at it, it's almost looking like one of the shorter ones. 35 days here to turn around. This looks like a long sort of time at the base over here. 36 days, 22 days. So point is that it's a big market to turn around, and the bases, when you see these moves, and now we sort of can look at sort of, this is a 5% move up, 3% move up, 6% move down. Okay, you get the point. When this thing turns, most of the time, yes, there's a couple like these ones, exceptions to the rules. Well, this is not so much this one here, but it generally takes a while. It's like basically turning around a battle cruiser. So you know what I mean? It sort of takes a while to turn around. It's done all this work and effort. It's stopped out people over and over and over again. It won't turn around one day later. I mean, the run for this here, this is mainly just for myself now. So it's 20 days of gains, 33 days of gains, 56 days of decline. So I'll go through actually because I'm sure there might be some like nice little rule that we can work out between the size of the base and how long the run goes for. But anyway, whatever. The point is that just because this thing, let's take this off for a second, has been sort of sitting down here for ages and ages. Yes, it's in a downtrend, and I'll get to this in a moment, but it has done a lot of work to get through here to sort of break up a little bit higher. Oof, those alerts are loud. Um, so I wouldn't be sort of first thing into the trade trying to fade this thing and sort of shoot it back down. We sort of look for some levels where we sort of say, okay, this is where sellers have been previously. This is where they might step in, but keep in the back of the mind that there's a high chance that this thing just sort of steamrolls. And this is what I was saying. If the data and all this kind of stuff actually doesn't look too bad, if we see, the corresponding datas from the different lower, that's better. If we're seeing the corresponding bits of data from other economies start to weaken, but the US dollar one sort of holds strong a little bit, there's a good chance that we see, the headlines change, the narrative change, and people say, hey, hold on, wait, you know what, the US dollar, it's not too bad. Because remember, look, and this is why I say the flows of capital, this thing's been bashed. We've seen this. I mean, this is going back start of the year down to now, you know, it's been absolutely demolished. Whereas you've got gold just put in a major lower high on a high time frame. You got Euro at its highs. Um, Aussie, well, Aussie's a different story. It's a different story anyway. But you've got a lot of things that are sort of got holding a lot of profit through this whole sell down. If you start to see the narrative change and you start to see that, hold on, wait, the data's not too bad, and Powell said he's not in any rush to cut. If you've got these other economies cutting, US sort of the Fed holding strong, plus then the stronger data, you might start to see a little bit of flow come back into these markets. And this is the thing that I'm saying, that this trade deal yesterday was, as you can see, quite impactful for the US dollar, because US dollar's been selling down. There's a myriad of different reasons, but one of the big ones is the uncertainty and what's going to actually happen around this tariff stuff, and that's across the market. So if we start to sort of see that, hold on, wait, some economies are coming around, UK, that's a big ticker one, they've linked together. Maybe we start to see a couple of these other tariff situations sort themselves out. Well, that'll reduce flows or demand for the gold, because that's obviously where people have been parking it, based on the idea that it's going potentially going a bit lower. Oh, no, wait, sorry, just looking at the charts and that sort of distracted myself there. Sorry, no, reduces the demand in that because of the uncertainties not so much there. So they might sort of look to sort of get out of that and then maybe get into back into the US dollar and that, because you know what I mean? Like, it's shown that the world hasn't blown up. And this is a big thing, that it's sort of like, people have sort of been run for the hills. If they see that it's, hold on, wait, now the tariffs are coming into effect, it's not actually as bad as we thought it would be. Maybe let's time to jump back in. It's at a pretty decent level down at 100, opposed to, where it was 107 or something a while ago. Anyway, look, that's a bigger sort of picture. Onto the actual sort of charts and what we can use with it all. So, let's first have a look. So we've got this little sort of breakaway channel that it kind of sort of had been sort of respecting a little bit here. It's broken through this. So if you want to sort of say, hold on, wait, here's the sellers moving down and you're working on a diagonal, well, bang, they've actually broken through it, because every time it's come into contact with this line, you can see, like, it's not even just small sell-offs. These have been drastic sort of hammers down, down, bang, bang. Look, that's one, two, little one, but still a fairly decent bounce down here. And then three massive sell downs in contact with this line. Sellers were very keen to sort of hammer that thing every time it hit it. It's broken through that. You got the horizontal, the 100.4. That's obviously still sort of, so just 2 seconds, just got 10 o'clock's just ticked over, just watching positions a little bit. That being taken out is significant, because as you can see, similar sort of thing. Every time it's hit these horizontals, it's been smacked back very hard. And this, particularly this period through here, very big sort of sell downs and that. So you can see what the sellers are doing there. So the sellers have been driving it down. They've been holding it flat. What have the buyers been doing? And this is the whole point. You're trying to work out and ascertain sort of what's the buyer doing, what's the seller doing. We can see, although we had these smaller structures which failed and failed and failed, the smaller structures here sort of breaking down. That's more sucking out everybody that's trying to sort of basically get long on the thing but timing it wrong, and blowing people out. Myself, not blown out, but myself included, in terms of sort of, here we go, here we go, here we go, bang, here we go, here we go, bang. It just didn't make sense. You had strong NFP data and it sold down. It was like, what the hell's going on? And then it bought straight back up afterwards. Okay, fine, that's it. It was a shakeout, let's go, and bang, sold down, bang, sold down. So, where we've actually sort of seen it pop through first of all, yesterday around this point here at 100.1 was the weekly flip, and then obviously bang, big sort of candle pushing through there. So, we've seen the buyers as a lot, like as I said, these are the smaller internal structures, but if you look what the buyers are doing at a large level, they're moving up. They're moving their bid up. They moved it up from here to here. They moved it up from here to here. This is why this was a significant level that had it broken, we probably would have been seeing a bit more of a breakdown to the downside over here. So you've got to plan for both of these things. Look through this last sort of bounce up through here. Let's actually, so through this move here, we go back to the 78%. We've seen small levels of buyers through here, and they held through here. All right, so let's get this out of the way. Start to clear it up a little bit more. So where to from here? So, significant that we've had the breakout through here. As I said, I wouldn't start fading into this thing. Look, if it comes back down here, well, I've got nothing. But structurally, what we probably would be expecting is maybe a little bit of a cooling. Sort of, this is on the 4 hour, it's a little bit overboard. Maybe sort of get this thing to sort of chill out a little bit. We'll have to see how significant this is on open. So we've got another 40 minutes or so to sort of see what they do with this thing here. But, so just bear with me 1 second. Yep. All right. So, structurally, what you could sort of look for is some potential sort of retest and then to move back up through here. It's nice to get the breakout and it'd be nice to sort of think this thing's just going to break and go, 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 go. But, you got to be sort of, still somewhat sort of tactful with this sort of stuff. So potentially a retest of these levels here, because what you'd be looking for there is you've got people that are shorting this, shorting this, shorting this. They've done very well. People have been hammering it down the whole way. You don't necessarily bail out the second it goes 2 pips past your stop level. If it comes back down here, you go, look, I've done really well. I've been shorting it all year. I've been making a bucket of money. I've been making a bucket of money through here as well. Now's the time to sort of maybe hit the sideline and see how strong this move is. So if we do get a push back down into these levels, look for these previous wicks highs. So probably around this sort of, as I said, 100, 100.4. If they start to see the bid push up from there, it's going to be a combination of two things. One, people buying the retest for a move to go a bit higher, and two, shorts covering, which is basically they've got to buy back their positions, which adds to the buying pressure as well. So if we see any sort of move down towards here, I would say that's probably a bit of a trigger and a time to sort of see if we can get a little bit of a long and sort of continue with that US dollar sort of strength. As to sort of how high it goes, well, as I said, I'm not in any rush to sort of really stand in front of this thing. With these breakouts, there's 3 parts. There's 1, the breakout, tick, we've got that. 2 is the back test, which obviously I just covered a second ago, and 3 is the higher high. So what you want to see for this move to sort of fully play out is this back test, and then a break above that breakout candle. So although 100.4 was our big sort of thing, so like as you can see with this level here, we've got a higher low. Now we have a higher high. You want to see this structurally retest, hold, and then continue this move up to the top side. So as we move through, there's going to be areas of interest. So we're going to be looking at this point just through here, which is at 123, and then depending on how fast this thing moves up, this seems like it might be a little bit more of a stronger area where we could see some sort of reaction. This is the not higher time frame, but the more original sellers sort of fall in resistance. This is before they sort of broke off on this little sharper kind of channel. So obviously similar sort of thing there. We saw the reactions each time it had hit those. Same up here, but it hasn't retested this line since start of March. So I would say you're definitely going to get some sort of reaction here. It's the bottom of this like little support area, swing area that we saw previously as well. So this is where I would sort of kind of be targeting. You might see a little bit of a reaction from this point here, just because it's sort of like has been a bit of an area, but that's kind of more what I'd be looking for. And as to what we do here, I think that'll be interesting. But I'd expect some sort of pushback from this area here. If we do break through here, so say we sort of get up here, we pull back, buyers step in as they previously have been stepping in there, like this, that's potentially what you're looking for. And that is the way that you sort of get a move through to a bigger breakout. So 102, I think, is pretty much the area that we're kind of targeting now. Should we get backtest hold and then a higher high move through 100.8? Let's call it 100.8 just for the round number. And then sort of see what happens through that. But, that's still 100.8 up through till 102, still 120 points. So, that's still got a little bit of time. You saw how things reacted off this little candle through here. So that's what we could say is a little bit of a stronger. But in the short term, look for a little bit of sort of USD weakness early in Asia, trying to sort of see if people are actually committed to this downside move. Downside move was US dollar sort of breakout move downside on your crosses, your Aussie, your Euro, these kind of things. Should this thing start to find buyers at this level though, that's the time that I'd say gold's going to be pushing down. That's the time I'd say Aussie's going to be breaking, say 63.80, which is going to be quite a significant level for it as well. And then you sort of hammer those shots. If you get the high through here, that's fine. That's, for me, that's a tick confirmation. And we keep sort of hammering those sort of USD long sort of positions, strength positions, up until this target here. Take profits up around this area when USD is coming into this area over here, and then wait to see what the market does. The market could just do exactly this. Could come up here and then go bang, pull all the way down here. It's a possibility. It's also the possibility that we do that and then sort of push us through here. But that's a bigger question. This is the structural setup. This is a wait and see kind of thing. Quickly on DXY, I think on the other chart I had it on the weekly. This is the move that I've been sort of calling. And this is what I've been saying the last couple of weeks, that you've got this roadmap for this thing to really pick up a little bit. It doesn't mean it's necessarily, going to follow this up to these levels and all this kind of stuff. I could see it moving up to 105 because it could stop out everybody that's sort of like got a very super wide side. I mean, they're shorting it all the way down through here. You know what I mean? Take out all these stops, hit a structural level, and then maybe we sell it back down. Like, this is what I'm saying. It's not necessarily that, okay, US dollar's going right to the top over here, but there is a good chance, particularly if we break this channel, that this thing moves up, people try to fade it, and they blow them out again. Moves up, try to blow it out again. Look, a lot of people have been calling 102, all this kind of stuff. A lot of people sort of think it's going to be coming down. So, as they start to sort of, as I said, where on that other chart, I was like, hey, look, we'll see what happens at this point. They start to load their short positions at that level. Well, that's the time that they go, you know what? Good bit of data here, good bit of data there, and they smash through those levels. So this comes from, trading this thing a lot of times and getting hammered a lot of times. So we'll see overall how long this move holds. But as you can see, it's taken a fair bit to get around here. It's been smashed down time and time again. There's a lot of people that have been wiped through this area. They've walked away. So that's perfect time for them to actually start to move it up. All right, so that's half an hour and we've only done DXY. Let's fly through these ones. We've got Aussie. This is what I was trading the other day, this 3 drive above the breakout, which I thought was quite a good little level, a good little trade, sorry. So this is our big sort of area that we were looking at. It was this 1, 2, 3. This didn't quite sort of add to any sort of level. This was more just for that little wedge that we saw setting up. Anyway, point is that 1 drive, 2 drive, 3 drive, this is above a breakout level. If you can, so it carries back through here. That's the top of your range. 3 attempts each time to get above and above and above. Didn't do it. And retest yesterday, and then bang. If you get onto the lower time frame, you can see this little channel was setting up, and boom, broke down. A kind of interesting thing with these channels as well, as I said, there's multiple points, well, multiple points, but there's multiple things to look for with these things. It's not just okay, breaks the channel and goes. There's generally multiple steps in that. And as you can see, broke the channel and then sort of came back up even higher and sort of stopped out all the early positions. I'm going to actually do a separate video on a couple of these entries because I think this is quite significant. This is obviously a much larger move, but if you zoom this thing down and you look at this on a 5 minute through this area as well, look what happens here as well. You break the channel and then it comes right back up. This is, for lack of a better name for it, I'll come up with a better name, but it's a screw you kind of move. Whereas, you've broken the channel. Okay, that's great. People short it. I've broken the channel. Here we go. And what does it do? Jams right back up and burns all those people that have said, hey, look, I put my textbook stop here, kind of thing. And it's just ripped right up, burnt them out, and then we see the move come down. This is a pretty, I would not say, I don't believe anything's completely universal, but it's a kind of universal sort of thing. Very big, you see it a lot on oil. I actually sort of traded a US 500, whatever ES or whatever their thing is, short last night. Very similar setup based on this kind of entry of this idea that you've got these drives. The last one moves like it looks like a technical breakdown. It was a slightly different setup, but the idea is it looked like a technical breakdown through this point here. This looks like a technical breakdown, which this looks like a technical breakdown because it's broken through the channel. But then you get the last little screw you move, comes back up, and then it moves down like that. So actually, click on this quickly. Where we are. This was the setup that I was looking at yesterday. Let's move through here. Nice to find sort of a little base there where we can see the sellers are sitting. But the point is that, you got this breakdown happening through here. Oops. Where was it? Trading it, maybe it's something to this effect. But the idea here basically is, you got lower high, you've broken your little wedge, you got a lower high, lower high, lower high, lower high. This lower highs, lower lows, the textbook says that's going lower. That's fine. This is the first part of it. Looks like you're going there, you get short. What does it do? Comes up here, stops out everybody. But the textbook said put my stop here. Or maybe above this high, maybe above this high, maybe above this high. You know what I mean? Like, that's the entry kind of thing. So to burn everybody out, I actually caught this leg down here. And this is, I guess, the Trump kind of thing. So I wasn't involved here. But point is still the same, that it hits all the stops and then you see the move happen. So should this thing sort of come down, and particularly down underneath this level down over here, underneath 5,600, I think this could very much be setting up for a big top. Anyway, this is a different market, but the idea, this is why I say this is kind of universal, because you do see this on a few things where they kind of screw them out. Anyway, back onto Aussie. So this is the setup with Aussie. We're moving down here. So we're coming back into the higher time frame range that we saw. It had a little bit of its time in the sun, poked its nose up over here. Obviously, bang, 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 couldn't hold, and it's moved back down. So now, actually, if I've got it on the other chart, where's that Aussie gone? What's on? Probably this one here. So what we've seen here is that previous range that we had that it was in for a couple of weeks, tested out the top, it's failed, it's come back down into the bottom side here. So now what we're potentially looking at is a breakout the bottom side here. And this is why I say it's important to watch sort of what's happening with the US dollar here, because should this thing sort of continue, and again, DXY is a barometer for what the major economies are doing with US dollar. Aussie's not going to be by any means immune to that. And if we see a breakdown in equities, it adds to it all. Copper is coming down and looking at potential breaks lower. That'll add to it. But US dollar buying across the board, I mean, is this one I've got the ticks on? No, I've got the ticks on the other one. That is what's going to be the big driver for it all. So should we see US dollar continue a little bit higher, move towards that 102 level? Well, we're going to be testing the bottom over here. And quite frankly, this is got a long way down. This is a very fast move down. Everybody knows this. It was a very fast move back up. Yeah, there's a couple of little exchanges, and there's like some areas in which we can say, hey, here's a bit of support. But more or less, look at this on a 4 hour. You know, this is very like straight up and then sideways, test out the top, and then bang, move. And this is not just out the top of this. This is above stops and levels that we've seen for, you know, the whole year. So it attempted to sort of break out for a top for the year, didn't get it. So now we're sort of looking to push back down here. So if you drag this up a little bit, because realistically that's probably more of your range, um, should expect to see some buys around these sort of 60s levels over here. Again, nothing's in a straight line. Should expect to see some buyers here, but should we see a second effort and a quick second effort, as in something down, bounce, and then a second effort quickly, that could be a big top here. Because these ranges, it tried to break out, and this is the thing, a failed breakout is as good as a breakout because it's just in the opposite direction generally. So, you know, this is the first target, look into the 60s, see what the buyers are. You can see it was quite a strong effort here. So it comes back down, I think that's price punished enough, that's about 140 points or so, maybe 150 points off the highs. So it's probably a good target for shorts, probably a good area for people to go, hey, you know what, maybe we get a little bit of a pushback here. Maybe that comes in line at the same time that we see US dollar into that first little resistance. But as this pushes back up here, maybe we see this little area here, this 153 or so, kind of see a little bit of a pushback, but it doesn't mean that this is going to hold. This isn't a main target. Should it push through, that could force the hand of Aussie to break through. And this is a chart that I was using yesterday. So these are the levels that I'm looking at. So, you know, it's definitely sort of cruising on its way down there. US dollar is, whoops, US dollar now on the front foot is pushing it down. China push back into the range, pushing it down. And RBA is still looking to potentially cut. I think they're pricing some ridiculous amount of cuts through the year. So there's a lot of things lining up for Aussie to break down, and underneath 63.20 is a major break. Like I wouldn't even sort of hold this buy zone here. I mean, it could be it's an area of significance. I wouldn't mind sort of seeing what happens when we get over here. Let's update this one from its highs. That's around the 61%. Yeah, I'd be happy with this. But 61.50 is a potential possibility, particularly if we go through 63.20. So that's a good trade. Should you go down through here? It was a pretty straight cut up here. It was a straight cut here. I don't see a lot, maybe sitting around, you know, low 62s, you might see something. But I reckon back down 61.50, and that's where I'd be looking to sort of get long. But I think the fact that it attempted to break out, 3 drive to the top side, it's been smacked back on the nose. If we see US dollar carry on here, I think we're going to see Aussie back down, sub 62, put it that way. And it certainly looks like it wants to push down there. This is like, you know, it's a very rough roll way of doing it, but this is a kind of secret sauce. If you have 3 of them pointing in the same direction, it's telling you something across the market. All right, flip along. We've got silver. And silver, as I said, the last couple of days, I've steered clear because this is just chop city. Look, I think metals are going to come off. Take this out of here for the moment. Let's take this out of here. I'm going to put that one back just because I'll use it for later. That's looking like some pretty good highs. Actually, where's that? Yeah. Look, you've got lower highs. Pretty solid sort of horizontal here. I mean, there's a bit of a scrappy kind of bottom here, but you know, through these levels down here, I think this could come down a bit lower. Like you kind of sort of, if you look at this on a larger kind of time frame, or larger sort of thing, you got moving down, moving down, moving down. You know, you're getting the lower highs here. The sellers are accepting less each time. You know what I mean? So any push up to, 92s, if you see a sellers step in here again, I would say, you know, days are numbered to go like this. But I'd say there's a possibility you don't even get this move and this actually just breaks through here. Because even if you look at that at the larger picture, well, then you look at this small move here. Well, sellers are here. Here's a bounce. Here's a bounce. They're not even waiting to hit this line anymore. They're jumping in early from that. And they're saying, hey, let's push this down, 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 down. I think very much the pressure is on this move here to come down. Very much on the pressures on the move there. I think take out these wicks. You got some like scrappy levels of support through here where it kind of shot down and up and over and over. Excuse me. That's where I'd still be looking short. I wouldn't be buying silver at this stage. I'm actually not doing anything with silver, but to me, this kind of looks like a bounce. Now it looks like it wants to roll over and come back down. And we're seeing the same sort of thing in copper. I think gold's had its time in the sun. I think that's probably coming down a little bit lower as well. And I said US dollar. I think DXY is the big, the connector with all this sort of stuff. I mean, remember, silver has been ripping all year. Yeah, it got smashed. People bought it, maybe got back on board. They've done very well with these swings. This was like a 30% move or something, wasn't it? Oh, was that? No, that was copper. Um, this was 20% move, and then another, more or less 20% move. I mean, do you want to buy something that's gone up 20% already, or do you want to buy something that's down 7%? I know that's the kind of thing, but not sort of saying that you want to buy something that's down 7%, but has the setup and basing ideas that it's going to be recovering, which is the US dollar. And this is where I say all these markets are connected and the flows will definitely sort of be dragged from a lot of different areas. So I'd be more inclined to sort of say that this thing is moving to the downside here. Move along, we got copper. I haven't even covered gold, have we? Let's get on to gold. Gold's very interesting at the moment. So let's get some of these out of the way. Gold showed its hand yesterday very much with, I think that gold very much is known for finding itself a range, breaking to the top side, and then, finding itself a range, breaking to one side, and then smashing it back down the other side. This is a very typical gold move before it does any of its moves. I've covered this a number of times. Trying to sort of find some sort of ones here. Like this is an area that we sort of called it. And moving into the range, sideways, fakes out to the bottom, continues up to the top side. Similar sort of things here. In your range, fakes to the top side, takes out all these lows, fakes to the downside, rips to the top side. Range, fakes it downside, rips to the top side. So it's not sort of like, wow, how's it acted like this? This is what gold does. It does it on a number of different time frames. Obviously, the higher the time frame, the more significant the move. It sort of got up here, and then I was sort of the father was Australian. I said, look, it's got to hold 3,400. Didn't hold 3,400, and then we saw an absolute bloodbath afterwards. As you can see, this was the idea that we were looking to go down, 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 bang. Worked out quite well. Where it's sort of retested here, and this is the point of the support resistance, you've got support through this whole area from that big sell down here. Support, support, support. They've been doing quite well yesterday as well. Just ripped up to the top side. People got a chance to get out. They took it. This was the thing. So you're in here, you're in here. You don't sell just because it broke through 2 cents. I mean, you do, or maybe you sort of manage your position or whatever. But, you hold, you don't have to hold, but, it's a target for people trying to catch the bounce. But it's also an area where people go, look, you know what? I've done quite well with gold. Not so much this time. Add into it, bang, and it sells down. So, this is the structure that I talk about each time. You break through, you target the lows. So these are the lows through here. You break through, come up and find resistance, resistance at previous support levels. You target the lows again. Hit the lows, breakthrough. Cycle starts again. Get these out of the way. Cycle starts again. You break through, come up and find. You find support, come up and find resistance, resistance at a previous support level, and then now we move down here again. And this is kind of interesting because you first of all you got to sort of work out what part of leg you're in. I'll do a separate video on this entries as well, but you got to work out what kind of leg are you in, what section are you in, and how to sort of trade that. And this happens across all the different time frames as well. So this is moving down to the bottom here. So we're coming down to test these lows to potentially break through. So you break through 32.88. I got down a little bit lower than I thought it did. I actually caught the short. Sort of got out. I caught the short down through here, got entries, and then I caught the short down here. I missed the last $10, $20 or whatever. Point is, you're coming down to sort of test this level down over here. If should you sort of break through, 32.88, then the cycle starts again, and you look for a faster move down to a level where you might find some support, where buyers had been previously 32.60s, possibly even down to 32.25s. So there's a bit of downside to come should this thing break and move down here. You can see the sellers are starting to sort of form a little channel moving down through here. This kind of seems like an area of interest, I would say, probably around sort of 32.70s should we break those lows. Where this is very significant is because this is on a lower time frame just in regards to this move here. But if you look at what we're actually seeing on the higher time frames, put on this other chart here, quite significant because, again, same sort of thing. You got your move up, find resistance, you move back, you find support. This was a very crucial leg. This leg had to come. And it's come in now, and it's put us in a lower high. Now, the emphasis is on these lows through here. Because if you break these lows, as well as I said in the video yesterday, you break these lows, well then you've got lower high and lower low. And for a long time, we've just been putting in high lows, high lows, high lows, high lows, except for little fake out areas and that kind of stuff. Another little area here in a range, breaks to the bottom and then rips up. So look, it's not by any means okay, party's over and we're going to 2600, but it does mean that the flow has started to the upside has started to dissipate a little bit. You can see that the sellers are stepping in again. Look, this could just turn out to be a big range, something to this effect. But I think sort of certainly your target now is around this sort of 32.30s kind of level. There'll be smaller targets for smaller timeframes through there, but particularly if you take out this little candle from last night, as I said, 32.80s, that's 32.30s is kind of where you're going to be targeting to see if the buyers are going to step back in here again, because obviously there's quite a big sort of move up here, and we saw these big sort of hammer moves up. But was this just an area where they shot it back up to get out of their long positions, smash any sort of shorts? I know I got whipped about in it. But should this thing sort of break 32.20s, 32.30s, these levels down here, then I think that could be the signal that we've got a little bit of a high in here and potentially going back towards sort of 3,000. I mean, there'll be levels through the middle there, but that's the kind of next main kind of level you'd be looking for in terms of where buyers have been previously. All right, flip along with these ones. Got copper. Copper, as I said, had this little flag. Where is it? Yeah. So this is a good example of breaks down, finds support, up, finds resistance, resistance at these previous support levels. That was the top for him, drove it back down. So we're in the third leg for these ones. So if you, whoops, have this little leg coming down here, this is your third leg down. So this is the one that's going to give us our idea. Are we going to get lower low continuation in which this whole cycle resets? You move down till you find support, up till you find resistance at a previous support level, and we continue down lower. Is it going to be as it is and tried to be yesterday, a double bottom, which in that case could lead to a range, or high highs out the window. Really, it hasn't got really a high high now. It came down to the bottom. So you've got rid of the high high. So it means it's sort of like the likelihood of this thing breaking back up over to here. Look, at anything can still happen. Double bottoms can be bottoms, but it doesn't mean that it's necessarily, you know, buyers haven't sort of gone, yep, okay, let's step up. They've tried, but the sellers will keep smacking it down, smacking it down. So for me, it's really the emphasis is on if they come back to this level here at 455 or 450, 453, whatever, if they step in here, then you're looking for a bigger range. And you could say, okay, here we go, boom, boom, moving up and down. I think, as I said, silver is going to break through. I think gold's going to cool off. I think DXY is going to break up. I think Aussie's going to break down. All these things that are happening at the same time means that I do believe that sort of probably copper's headed lower, destined to head lower. So this is the trade I'll be looking for, a move down here, and then potentially, let's actually, whoops, get rid of this because it kind of was a flag, but it very much got chopped out with it all, so I'll delete that. This way, we would just be looking for some horizontals, maybe around that 61%. But I think this could definitely be a little buy zone around that 430, 436 level, where you could potentially sort of hammer down here. And then again, if you're looking at this cycle, it's going to have to sort of come back up and get this leg at some stage. And that's where you could potentially get buys from this level and here, down here. And you could see this move up, target these previous lows, and then sort of see what happens with the market, whether it's a shakeout and pushes back through or whether it just comes back down lower. So I think, yeah, probably some downside for copper coming here as well. And USD China, this is what I was saying. Is it going to do one or two things? Is it going to break back in or is it going to reject back down? It tried to sort of reject back down, as you can see. It break up here, sell back down, but there was that big negative divergence. And it's not a typical textbook negative divergence because it wasn't going a lower low, but it was certainly coming back to that same level. But you can see the buying pressure on this thing was immense. It was already pushing up into this area. Came up here, tried to push back down again, and moved back up into the range. So if you look at this as a bigger picture, it's almost like a counter swing move to this little attempt where it went to 4.2. Now it's tested out the bottom. Now it's coming back up into the top side over here. This is also coming with, as I said, US dollar strength across with DXY breaking out. It's coming with Aussie sort of breaking down a bit. Equity markets breaking down. Well, not breaking down, but potentially seeing a bit of a top. Not that this is directly related to the equity markets, more so to Aussie and gold and DXY. But should this thing continue to move up through here, it's going to continue to put a little bit of pressure on gold. It's going to put pressure on Aussie as well. And that I think will all sort of flow together. All right, that's it from me.